All right, good evening, everyone. So, on this class, we're going to be talking about different types of trading orders. Okay, this is a beginner's class. And on this class, we'll go from us here to show you how to enter trades. What types of trade orders, are there. Now, when after you've looked at the market or you've gotten a trade signal from the market, right? What next do you want to do? You want to execute that trade. Okay, you look at the market, you analyze the market, or you analyze the market either by yourself or with the help of someone who has broader understanding of the market, right? And then you have a signal from the market, right? And this signal is either for a buy or a sell. So you decide, I want to take this trade. I want to execute this trade because that's the only way you're going to profit from the market, by actually executing trades. So question is, what kind of trade am I going to execute? What kind of trade am I going to execute? Am I going to execute, first of all, am I going to execute a buy trade or a sell trade? Am I going to execute a buy trade or am I going to execute a sell trade? That's what you ask yourself. Okay, I see that this is a buy trade, for example, right? Now, what kind of order am I going to take? Am I going to take a instant market order or am I going to take a pending order? Right? So what determines what order you're taking depends on where the price is on the market currently. Where is price at this moment? Is price at the point where I should be taking my trade market-wise instantly? Or is the market still playing out? Does the market still need time to play out before my trade gets active? Right? That's what you're determining. I can tell you most of the time, after you analyze the market and you decide the trade you want to take, there is usually a waiting period. And that waiting period is the time between when you analyze your trade and when the price gets to the area where you are meant to activate that trade. So when you come to the market on a daily basis, in the morning or in the evening, whatever time you're getting to the market, you open your computer, you open your device, and you are trying to find the trade. Okay. Now, by the time you look at the market, most of the time, the market will not be at your ideal spot, right? So that's where the waiting game comes in. But in a few cases, the market might be at your ideal spot, or you might decide, you know what, market is not at my ideal spot, but I'm going to have to wait for price to get to my ideal spot. And when it gets to my ideal spot, I make. So there are two types of orders, two main types of orders. One we call the market execution order, also known as the instant execution order, but mostly we call it the market execution order because that's more accurate. Then the next one is what we call the pending order. So for market execution, that's when you buy and or sell on the spot. So price has gotten to where you want to enter the market and you're placing a buy or a sell order for at the moment. A buy or a sell order at this exact moment, right? That's what it is. That's what a market execution order is, right? So you and like I said earlier, you've analyzed the market, you determine that price is going to get to a certain area before entering the trade, and price is there now. What are you going to do? Pull the trigger, execute. Okay, so that's why we use the word execution. So you're making a market execution at that time. You make an order, right, for a buy trade or for a sell trade. So you enter the market, and what happens is that when you place a buy trade or a sell trade, the market executes at the current market price. So it doesn't ask you for any price. When you click a buy, it buys. Question is, at what price did it buy? It bought at the current market price. Because there is a market price at every moment in time. That is the market execution. It's usually instant at this moment. That's where the word instant comes from. It's actually market execution, but the word instant means that it's happening right now, at this moment. Okay? It's not a waiting thing. You are at the point. You're placing a buy now. It enters the market and you see order placed right now. Okay. Now the next thing is the next type of order is what we call a pending order. So what kind of pending order, what kind of an order is this? So a pending order is placing a buy or a sell above or below current market price. So current market price is where the market is at the moment. When you open your chart right now, gold chart, Euro USD, GBP USD chart, when you open that chart at this moment, you're going to find that there is the current price for that instrument at this moment. It has a current market price. It has a current bid and ask price at this moment. You see it there on the chart. Okay, you see it there, right? There's a bid, there's a ask price. It's there right now. Now, when you look at that and you're trying to place a trade place a trade somewhere other than the current market price, that's what we call a pending order. There are different types of pending orders we're going to see shortly, but that's the rationale behind it. So price is currently at 1.25, for example, 1.25. But your goal is, based on your analysis, 1.25 is not a good place to enter the market. So what you do is you place a pending order. Instead of waiting for price to get to 1.55, which is the correct price you want to enter the market. Price is currently at 1.25, but you want to execute your trade. You want your trade executed at 1.45 in the market, right? Now, instead of you waiting and waiting on your chart until the price gets to 1.45 and you place a buy or sell, you can place an order called a pending order so that when price gets to 1.45, you instruct the chart that when price gets to 1.45, please execute my trade for me, even while I'm not there. That's why it's called a pending order. So when you place the order, you see it pending. It will be showing you place or pending, depending on what you're on the device you're using, placed or pending, right? And then what happens is that when price gets to that exact price, number that you have set, it activates. And then it moves from a pending order to a market order. All right, so there are two types of pending orders. Number one, we call the stop order. The stop order. Second one, we call the limit order. Now for the stop order, we have a buy stop and we have a sell stop. For a limit order, we have a buy limit and we have a sell limit. Okay, these are the two types of pending orders, right? But take note of something. The keywords here are the buys and the sells. So if you're on a stop order and you're saying you want to buy stop, that means, remember, the idea here is I want to place a buy trade, but I'm using a pending order called a stop order, right? So if you're looking to take a sell stop, what you're doing is that you want to place a sell trade, but you are looking to use a pending order called a stop order. Therefore, limit order as well. The keywords here are buy and sell. So when you want to place a buy trade, your goal here is place a buy trade, but you're using a pending order called a limit order. Then for the sell too, you're looking to make a sell trade, but you are trying to make a pending order trade called a limit order. So let's look at this. Let's look at this. So this is more like a pictorial depiction of what we're talking about here, right? Now we have stop orders on the left, we have market orders on the limit orders on the right. We have stop orders on the left, we have limit orders on the right. Okay, so let's look at this. Now, a stop order is usually what we call continuation orders. Stop orders are called continuation orders, while limit orders are called reversal orders. Stop orders are called continuation orders, while limit orders are called reversal orders. And you know shortly why we call them that. Now, like I said earlier, when it comes to buy stop, sell stop, buy limit, sell limit, the key word is buy or sell. So always have in your mind, by the time you're thinking buy stop, what am I trying to do? Buy is the key word. So you're trying to buy. Your goal is to buy here, but you are using an order called a stop order. So now, buy or stop orders are called continuation orders because they tend to follow a continuation strategy, right? So you have price at the current, notice where the price currently is at the blue ball is where price currently is at. Now for you to use a pending, a buy stop order, you are going to be placing your price, placing your trade, sorry, you're going to be placing your pending trade ahead of the current market price, which means somewhere higher than the current market price. That's why we're calling it a continuation order. Price is already buying, but you expect it to continue to buy even beyond the order that you just placed. So price is currently here and it's been buying. But now you are expecting that price will continue to buy even beyond the green level, the green area. So you place a buy stop order there in expectation that when price gets to that level, it will break beyond that level and keep going forward. So in that sense, it's a continuation order. You're looking to continue this trend that you already see in the market. You're expecting price to continue buying, even though you can see that it has already been buying, or it's been buying for a while. So your goal is when price gets to this my level, this my pending order level, it should continue buying. So it's continuation. Then look at the sell stop orders. Remember again, the keyword here is sell. Now look at where the blue ball is, and price is already selling. Price is already selling, but here you are expecting that you're placing your stop order, your pending order, somewhere lower than current market price. Current market price is where the blue ball is. Now you're placing your trade somewhere below current market price. And the expectation here is that price will continue to dip even below price will continue to dip down even below the area where you're placing this pending order, right? So that's why you're looking for price to continue the trend is currently on. So your pending order goes somewhere below current market price, even though you can see that price has already been selling. Price has been selling. You expect price to continue to sell. Okay. You expect price to continue to sell, right? So this is mainly used when you expect when you're expecting some sort of a rapid movement in a particular direction. Your price is already selling, and you're expecting to rapidly move in a particular direction. Maybe you are expecting it to rapidly move, to rapidly dip downwards even further. Price is currently selling, but you're expecting to dip even further, to dip even further below where it's currently at. So this is the strategy most times that news traders use. People who trade the news during when the news release comes out. So price is already buying.
I've got to think it. It's got
Please keep yourself mute. Thank you. So this is it. Like I said, this is the strategy that news traders use most of the time. People who trade high frequency, right? The news, a particular news event is about to be out, or let's say it's non-farm payroll or is USD CPI and all that, and it's expected to really be volatile. And usually in that period of time, we know that price is either going to rise or fall very sharply. Price is going to rise or fall very sharply. Since price is going to rise or fall very sharply and you don't know where the market is, you can use a pending order, a buy stop or a sell stop. You know that if price is currently selling and the news is weak for that particular instrument, price is likely to continue to sell, right? And most likely it will do it very rapidly. So you place a sell stop, or price goes there, hits that entry, and then triggers it and keeps going downwards. Or on the other hand, if it favors the buy, if it's a good data that favors that instrument, it's expected to rise sharply. Even though it's been rising already, you expect it to rise even sharply in that period of time. So Pending orders are mainly used when price is expected to continue to go in the direction it's already going, right? So if you expect price to continue to buy even when it's already buying, you use a buy stop order. If you expect price to continue to sell even though it's been selling already, you use a sell stop order. But then remember, what you're doing here is that whenever you go to your chart and you click on new order or you click on trade, okay? Let's say you pick your phone and you go to Euro USD, for example, or gold XAUSD, and you click on the instrument under quotes, click on the instrument, and then you see new order or trade. If you're on Android, it will show you new order. If you're on iOS, it will show you trade. Click on that. Now it will ask you, you will see at the top of the screen, you see market execution. When you click on the drop down button there, you will see pending orders, buy stop, sell stop, buy limit, sell limit. So you select your buy stop, for example, and then once you select that pending order called buy stop or sell stop, whatever pending order, it will prompt you for price. That's the first thing you will see on your screen. You will see that it will start to prompt you for price. But normally when you go to the market and you're entering a trade, an instant trade, like a market execution trade, it doesn't ask you for price. Why? Like I said, because it executes the trade at current market price. But when you use a pending order, it asks you for price. So it's asking you, okay, now when you select a pending order, buy stop, sell stop, buy limit, sell limit, the market automatically understands that you are trying to set a trade, a pending order. And then since you're trying to set a pending order, you want to place your trade somewhere different from current market price. You want your trade to activate somewhere different from the current market price. That's basically what the market understands. The chart understands that that's what you're trying to do. So what it does is it prompts you for price. It prompts you for price. And now you have to impute the price that you expect, where you expect the market to activate. So let's say this area is the blue ball, this current market price. Let's say that's 1.25. That's the current market price for whatever instrument, 1.25. And then this area here, this blue area, green area here is 1.45, and that's where you expect your trade to be activated. So once you select buy stop, it will automatically prompt you for price. And once it prompts you for price, you now impute 1.45 because that's where you expect your trade to be active. You prompt it there, and then it will ask you for your stop loss and ask you for your take profit. You put all that and you click place. It will not tell you buy or sell. It will show you, it will tell you to place because you're placing the trade. You're not buying or selling per se at this moment. When that trade becomes active, when price moves from 1.25 to 1.45, then that trade becomes active. It moves from placed to active, to buy or sell. You see? So it moves from pending to active all by itself because you placed it way ahead of time, right? So that's what that is here. That's what buy, stop, and sell, stop and sell stop orders are for. Then for buy limit orders, we call these continuation orders. Continuation orders. And why do we call these continuation orders? Sorry, we call them reversal orders. Pardon me, reversal orders. Buy, stop, sell, stop orders are called continuation. And we already seen why that's called that, why they are called that. Then buy limit orders are called reversal orders. Reversal orders. Why are they reversal orders? You can see the screen. There's some reversal there. So here's the idea. Now, remember the keywords here, buy and sell. Keyword buy, keyword sell. So when you're using a buy limit, what you're trying to do is you're trying to place a pending order for a buy. You're trying to place a pending order for a buy, okay? But in this case, this is different from the stop order, the buy stop order. You're trying to do a limit order. Why? Because there's a little bit of a difference here. Now look at where current market price is. The blue ball is where current market price is. Now, you are not trying to, your goal is to buy. Remember this? The goal is to buy. You are expecting this move to happen, this arrow here, this move to happen. Price is currently at the blue ball, but you recognize that this is not a good place for you to enter the market. I want to buy, but this instrument I want to buy is not cheap enough. It's very highly priced right now. It's very, where it is in the market is really high. I need to come to a discount level. I need it to come below to the green area before I buy. So price is currently at 1.45, for example, but I need it to come down to 1.25 level because that is a better area for a buy. Remember, guys, whenever you're entering the market or thinking of entering a trade, you are thinking of entries. What's my best place to enter this market? Because, for example, if you're buying and selling anything, let's say in traditional business, you're trying to buy and sell, you are looking for the best price because the best price helps you make more money. If you buy something for $10 and you are going to sell it for $15, you'll make only $5 profit. But what if you're able to buy that thing for $5? That same thing. If you're able to buy for $5, that means you are not going to sell it for $15 and make double the profit you would have made had you bought it for $10. So what you're looking for is you're looking for someone who bought it for $5 and is going to sell for $15 is going to make way more money than the one who buys for $10 and sells for $15. So that's what you're trying to do here. One got a discount. The other one paid regular price and is going to sell for a higher price. Both of them are going to sell for a higher price, but one got a deeper discount, which makes his own trade more profitable. Okay, so if someone enters a buy trade at this blue ball, and another person waits for price to get to this green area and enters for a buy, by the time price starts moving, the one who waited for a discount will make more profit than the one who bought at current market price. So you want to buy, you want to make a buy, remember you want to make a buy trade, but you are not looking to buy at this moment because you expect price to even dip lower before it buys. You're expecting it to come down a bit from 1.45 to 1.25 before buying. So what you do then is instead of entering the market with market execution and place buy now, right? Buy by market, what you do is you place a buy limit. Buy limit. So you go to your chart, you click on the instrument, you select trade or new order. You find market execution there. Click on it. It will pop up a whole range of options. Click on select buy limit. Once you select buy limit, what happens is that it asks you for price. It will prompt you for price. Then you put a price that is lower than the current market price. The price is at 1.45. Then you impute 1.25 there, and then it becomes active. It will ask you to place the trade. Trade is still not active yet. It's a pending order, right? Now notice something, guys. If you place the difference between buy stop and buy limit is that for buy stop, you are expecting to put the pending order at a point that's higher than current market price. While for buy limit, you are expecting to put where the trade you want to place, you are expecting to put it at a price lower than current market price. Buy stop higher than current market price, buy limit higher than lower than current market price. That's a major difference. And the thing is that if you mix that up, the trade will not place. That's going to be telling you that something is wrong. If you select buy limit here, and then you're trying to place a trade, use a price that is higher than current market price, it will not activate. It will show you inactive. The trade will be inactive. You will not be able to place it. And that tells you that some parameter that you've selected is wrong. Some people start to ask, oh, what's going on? What's going on? I'm trying to place a trade, it's not going through. Oh, it's like the system, the platform is having an issue. The platform is not having an issue. I'm telling you right now. Okay. What you are doing is that you're selecting a wrong price point for your pending order. If you select a wrong price point for your pending order, the trade will not be active. You will not find a place to click on place. It will be grayed out, to be inactive. You will not be able to place that trade because something is wrong. The system does not know what to do. So the system, the parameters you set is wrong, are wrong. Now, another thing also is that remember, after you place your price, the system will also ask you for a stop loss and take profit. If you impute a wrong take profit or a wrong take profit or a stop loss, it will still not be active. You will not be able to place the trade. So just know that when you impute the price or any parameter at all, and you see that the button is grayed out, which means you cannot click it, just know that you placed the wrong, your parameters are wrong. One of your parameters or several of your parameters are wrong. That's the reason why the trade cannot be placed. Okay, it's not because any other thing is wrong. It's because the parameters are wrong. Okay. Now the next thing is sell limits. Sell limit is the opposite of sell or buy limits, right? Now in this case, you are also looking for a discount for your trade, right? You're also looking for a discount on your trade. So you're looking, remember, the key word is what? Sell. The key word here is sell. The key word here is sell. But what are you looking for here now? You are looking to enter a trade somewhere higher than current market price. Somewhere higher than current market price for this sell. You are anticipating a sell. That's why you're placing the sell trade. But this time, you are looking to place your pending order somewhere higher than current market price, not lower, like in sell limit, like in sell stop. For sell stop, you are looking to place your pending order somewhere lower than current market price. But for sell limit, you're placing it somewhere higher than current market price. So look at current market price here. You are expected to put it somewhere higher. Let's say this is 1.25. Up here is going to be 1.45. That is where you are expected to impute. That's where you're expected to place your trade. So when you go to your chart, you click on new order, you go to market execution, click on the button, you see select sell limit. It will prompt you for price. You need to put a price that is higher than the current market price. Somewhere higher. You've looked at your chart, you've seen that price is going to sell, but not at this moment. Price is going to push up again. Current market price is going to rise a bit, then activate and then sell. That's what you're looking for. So this is current market price, which is this. Now you expect price to move to this level, activate and sell. So you will impute the price on this area here, the price around this area is what will be your entry price, your sell limit price. Now, once you've done that, you impute your stop loss and take profit, and you are good to go. Okay. So this is what it takes to use a pending order, as against market order pending order. So you have to decide as a trader what exactly, which order is suitable for your trade per time. Okay. Now, the beauty of using pending orders is that you don't have to sit around the market waiting for a long time for price to get to your entry level, right? Because of course you could be busy with other things. Very, very valid. You could be getting ready to enter a trade, and yet you're busy with other things. So what you do in that case is you set a pending order so that when price gets to that point, it activates without your permission, without you having to manually place a buy or the sell. But of course, when you are at the point where you need to enter a trade, you use the market execution, you enter for a buy or sell immediately, you set your stop loss, take profit, and you're good to go. Okay. But for any other trade, I can assure you, for most of the time that you're going to trade, most of the time, price will not be at the point where you want to enter the market. You will have to wait a bit, right? You have to wait a bit for you to enter that trade. So in that case, a pending order might well be the best option for entering the market. Okay. So what we're going to do, guys, is that you're going to go and practice this. Practice this on a demo account, on your demo account first and foremost, because most of the trades we give you, are they are pending order trades. And the reason for that is we want to be able to, based on the fact that basically that's how trading works. Most of the time when you come into the market, you're not going to see a trade to take immediately, right? And then also it helps for those who are not currently active at the moment to still come and take a trade, you know? So if we place a trade, send you a trade now, buy or sell, and then someone comes there after 30 minutes, he can still see that the trade is still good and he still enters the trade because the trade is not even active yet. It's a pending order, right? But price is still moving, has not even gotten to a place where you should buy or sell yet. So at that point, in that case, that's a very good thing for people. So you have to take use your own trades, take practice this on your demo account, and also use the trades that we give you on the market, on the Telegram group, to practice this. Make sure you practice this a couple of times, practice it a couple of times before you move it to your live account. When you practice this 5, 6, 10 times, then you move to your live account and start placing the same trades into your live account. Okay? Any questions? Anybody with a question? Does anybody have a question to ask? Okay. So we're going to stop the class here, and then please go ahead, practice this, and then you see that this will really improve your trading. Thank you, guys. I'll see you guys on the next one.